Hey folks, Eli Zolo, the colorful accountant here, and we're going to go into the topic of how does yin and yang connect with accounting? Well, I think I figured it out. Okay, so here's I don't know if you can see that. I got to work on this. There, you can kind of see it. Okay, so there's assets equals liabilities plus owner equity. Camera needs to focus that. It's a new equipment, it's a new day, and I'm really starting to learn this, so bear with me as we approach the learning curve. I think that works better with the lighting. Getting the lighting right is important. So that's yin and that's yang. Assets equals liabilities plus owner's equity. It's the basic, that's the foundation of accounting. When you go to the accounting class for the very first day, it's like the first thing you learn. And it's the basis of everything. We talk about double entry accounting. Right there, that's balance, right? For every debit, there's a credit. For every yin, there's a yang, right? And when we're out of balance, it doesn't work. And that's the same thing in your body. If your yin and yang are off, things are gonna go wrong. So we gotta strive for that balance. At least I do, and I hope you do too. Maybe we don't even know, right? So this may help heal people as we explore this. So I consider the assets on this side of the equation that this is like the yang side of it. In general, this is the big scope of things, because we're gonna find as we delve in that there's yin and yang in both sides actually. But from the general yang, assets are yang. They provide, they create the place for sustenance. Money comes in because of those assets. So assets are assets because they generate revenue. So that's why I call this the yang side, because it's providing for the business. Now I go over here and I consider this in general the yin side of things, because it's more of like the receiving, taking care of the home sort of energy, you know. Traditionally, and not to say anything, I mean, women take all roles. I know women. There's a very good friend of mine and a woman I admire who's both mom and dad to her daughter. So she's yin and yang, and she's a lot of yang. So, but she turns me on, so I can deal with that. So this is like the yin side, liabilities and owner equity. Think about it. So owner's equity is like, that's like the carrying of the business. That's what's left. Basically, when you sell your business, what's left is owner's equity. So it's like that fostering, that parental role, that motherly role that sustains the livelihood of the household and the family. And usually moms do that. You know, a lot of times they're taking care of the kids more, and especially when the kids are young. So that's owner's equity and liability on that side too. That's, again, the equation is assets plus assets equals liability and owner's equity. That's like the basic accounting 101. And then we're trying to break this down. Yin and yang. Yin, yang, accounting, and the universe. Is it all tied in? So the liabilities, I didn't touch that one yet. Definitely that's a receiving. I mean, think about it. When you have a liability, you're taking in money from somebody's going to give you money. A bank's going to give you money. Somebody owes you money, they've given you. So to be in the place of receiving is where a liability comes in. And so very much a yin energy. Okay? So, and you can see this little, this is getting real accounting. 30%, I think when I was in Accounting 101, 30% of the people in the class bailed out when we got to debits and credits. And what is a debit, what is a credit? And I'm not talking about debt. I'm not saying the debt's wrong. A debit is a specific thing. In accounting, a debit it's either a plus or a minus. That's the hardest thing to get people to wrap their heads around. What is a debit? What's a credit? And people generally think, when you first hear about it, debits are introduced as pluses. So you think, okay, all a debit's always a positive. But no. Just like life and the universe, we don't know all the answers. Yin and yang is a tricky thing, right? And so is the accounting equation. And people get thrown off and they leave. before the class even gets started. It's debits and credits. We're in like week 1, class 3, and 30% of the class is gone because they realize, I can't wrap my head around that. I'm not going to be able to do that as a career. But for me, it was fascinating, and I got it. So let's see if we can finally get it through. So a debit is a debit. That's the name of one side of a transaction. Everything in accounting is double entry. For every entry, there is 2 parts of it. One part is the debit, one part is the credit. And forget about what is plus and minus, because that's going to throw you off. Just forget it. A debit is one part of the transaction, a credit is the other side of the transaction. So let's say when you go to Whole Foods and you buy some food, you have a your debit is the expense of food expense. Your credit is going to be the bank account or your debit account or your credit card account, because you're using funds, and that's the credit. The debit is the expense, so that's how it works. Every transaction, there's a debit and a credit. If you get a car loan, it's a couple of transactions, but you get a car loan, so you have, in its simplest terms, it's the car is an asset and you're adding to the asset, so that's the debit there, and the credit is that you're taking on a loan, and so that's the credit in that transaction. But it doesn't mean it's plus or minus. It doesn't mean anything. Here, I wrote it down here. So let's go over to the Yang side, assets. Well, in assets, whenever a debit will be the addition to the asset, so it adds, and credit, that's the subtraction of it. And on the other side, both liabilities and equity works totally opposite, right? So for yin, there's yang. For a debit, there's a credit, and it works differently on each side of the equation. So here, on liabilities over equity, it works totally opposite. The debit is actually a reduction, and the credit is the addition. All right. So I'm going to keep this really simple as we go through these videos. And that's it for this video. This is video number 1. I did the introduction, so this is really video number 2, but I'm going to call it video number 1 because it's content. The first was just an introduction. And I'll see you guys on the next video. And I plan to do this at least weekly. So stay tuned to Eli Zolo, the colorful accountant. And when my goal is when we're done with this, you're going to say,
that was easy.
Right on. Take care, guys.